India's stock market is on a rollercoaster ride. After reaching record highs, the market is experiencing a dip. The BSE 500 index, a broad measure of the Indian stock market, has fallen 19% from its peak in September. This decline has left many investors worried. Is this a sign of bigger problems in the Indian economy, or is it a temporary blip? This essay will explore the reasons behind India's stock market dip. We will analyze the factors at play and assess whether this presents an opportunity or a risk for investors. Join us as we delve into the intricacies of the Indian stock market and uncover the potential it holds for savvy investors. To understand the current market situation, we need to look at the numbers. The BSE 500 index, which tracks 500 of India's largest companies, is a good indicator of overall market sentiment. Its recent decline suggests that investors are concerned about the economy's future. However, it's important to note that not all indices are showing the same trend. The Nifty 50, another prominent index, has been relatively stable. In fact, it has outperformed the US S&P 500 index in the last month. This contrast highlights the importance of looking at multiple indicators before drawing conclusions about the market's health. Several factors have contributed to the recent dip in India's stock market. Globally, a trade war between the US and China is creating uncertainty. Trump's tariffs and a fluctuating US dollar are making investors nervous. These global headwinds are impacting markets worldwide, and India is not immune. Domestically, India faces challenges like slowing GDP growth. The economy grew at its slowest pace in 2 years, clocking in at 5.4%. This slowdown can be attributed to various factors, including high oil prices, a weakening rupee, and rising inflation. The Indian government is taking steps to combat the economic slowdown and restore investor confidence. One measure is cutting the benchmark interest rate. This move aims to encourage borrowing and investment. The government has also introduced tax breaks for the middle class to boost consumer spending. Furthermore, India is investing heavily in infrastructure. This investment is expected to create jobs and boost economic activity. The Make in India initiative, aimed at boosting domestic manufacturing, is another key strategy for long-term growth. Section 5. Navigating the risks, a bumpy road ahead. Despite the government's efforts, India's economy faces several risks. Volatile food prices are a major concern as they directly impact a large portion of the population. Additionally, rising energy costs due to India's dependence on oil imports contribute to inflation. The weakening rupee is another challenge, making imports more expensive. Externally, global trade tensions, particularly between the US and Canada, are adding to the uncertainty. These factors suggest that the road ahead for the Indian economy might be bumpy. Section 6. Spotting the silver lining opportunities amidst uncertainty. Despite the challenges, the current market dip presents potential opportunities for investors. Long-term investors might find this an opportune time to buy stocks at lower prices. Experts recommend focusing on high-quality stocks, particularly large-cap companies with strong fundamentals. Exchange-traded funds, or ETFs, offer another avenue for investors to gain exposure to the Indian market. ETFs like iShares MSCI India ETF INDA and iShares MSCI Small Cap ETF SMIN are currently trading at significant discounts from their recent highs. Section 7. A long-term perspective: India's growth story. It is crucial to view the current market dip in the context of India's long-term growth story. India remains one of the fastest-growing major economies globally. The country's young population, increasing urbanization, and rising middle class are strong drivers of future growth. The government's focus on infrastructure development, digitalization, and ease of doing business is expected to yield positive results in the long run. While short-term volatility might persist, India's economic fundamentals remain strong. Section 8. The investor's dilemma: to buy or not to buy. The current market dip presents a dilemma for investors. Is it a good time to buy, or should they wait on the sidelines? The answer, as with most investment decisions, is not straightforward. It depends on individual risk tolerance, investment goals, and time horizon. For investors with a long-term perspective and an appetite for risk, the current dip might offer an attractive entry point. However, it's crucial to conduct thorough research, Choose investments wisely and avoid making impulsive decisions based solely on market sentiment. Section 9. Conclusion. India's market. A marathon, not a sprint. India's stock market is experiencing a period of volatility. While global headwinds and domestic challenges have contributed to the recent dip, the long-term growth story of India remains intact. The government's proactive measures, coupled with strong economic fundamentals, suggest that this dip might be a temporary phase. For investors, this presents both opportunities and risks. It is essential to approach the market with a balanced perspective, focusing on long-term growth prospects while being mindful of potential risks. As with any marathon, patience, discipline, and a well-defined strategy will be key to success in the Indian stock market.